Hello, welcome to the next in a series of express videos within ACCA's FA1 recording financial transactions. This video is still based on our express notes, which you can download from www.theexpgroup.com, and this time we will be talking about financial statements. We will discuss the various items of financial statements during our video here. If you look at the first page in this chapter, which is page 12 in the notes, you will see within the big picture section the following components of financial statements. Mandatory components of financial statements is a statement of financial position, which used to be called the balance sheet, a statement of comprehensive income, which in the past used to be called income statement. However, it has more information than the old income statement, so I'll leave it just saying income statement plus. At this point in time, it is not necessary for you to know those details. A statement of cash flows, obviously the something that used to be called cash flow statement, you all know what it is. Actually, there's one missing here which could be mentioned, is the statement of changes in equity. Which also needs to be produced, and finally the notes to financial statements. Now, each of those components plays a certain role in the whole financial statements. The statement of financial position is always described as a snapshot of company's performance during the period. Why is that so? Well, that's because of how it looks. Statement of financial position is just a listing of all the assets, so basically what we have, right? It's everything we've got in our business. It's also a listing of our equity and liabilities, which basically is what we owe to other people. Liabilities is what we owe to external third parties, while capital for a sole trader or equity for a company is what we owe to our owners / shareholders. Alright, so if you want to see what the balance sheet is, what the statement of financial position is, it's just a listing of all assets, which is what we own, and equity and liabilities, which is what we owe. Now, as you know, balance sheets usually balance because one must be equal to the other. What we own, what we bought, what we acquired must have been bought for something, either for the money that we borrowed or from the money that was given to us by our owners. So that's more or less the idea behind the statement of financial position. It is a snapshot, and it is always as at certain date, usually 31st December of some year. That's just a listing of what we have and what we owe to other people at that date. If we move to the statement of comprehensive income, if the balance sheet or the statement of financial position is a snapshot, then statement of comprehensive income is a film. Right? It is a summary of everything that happened during the last year. So let's say this is the 31st, well, this is actually 30th of June. 30th of June 2001. So everything that happened from the 1st of July 2000 to the 30th of June 2001 is a film which is shown as a statement of comprehensive income. Now this is a total of what we sold during the period. This is how much it cost us to manufacture what was sold. And ultimately, after incurring other expenses, we made the following profit for the year. Our final snapshot in that film should show this balance sheet. But over that period, we had the following revenues, the following costs. We made the following gross profit, which is just what we sold minus what it cost us to manufacture what we sold. We incurred other expenses, which ultimately led us to this profit.